Hello and welcome to Crypto Weeklies. In this video, we talk about Bitcoin. None of the content is financial advice. Let's get started. Bitcoin now has put up a new all-time high, close to that 112k. Now the price has cooled down a bit, but you can see it has reached its previous all-time high that it set back in mid-May of 2025 and slightly exceeded it. Now the price is at 111.3k. Still, it's a big milestone. Right now, the 20-week simple moving average is at 96k. 21-week exponential moving average is at 99k. So from the 20-week simple moving average perspective, the risks associated with Bitcoin are kind of in the moderate risk range between 0.4 and 0.6. They are not as close from a 20-week perspective as they were back in March as well as in December of 2024. Back then, the risk, at least in December, were well over 80%, almost 0.808. That signaled a shorter term peak from December till April. There was a heavy sell off, and from a risk perspective, the risk in early April were only 8%. Again, we made several videos related to Bitcoin when Bitcoin was in a low risk zone. You can check out those videos to verify. On the home page of the website, again, you can see 3 weeks ago, 11 months ago, 7 months, 4 months ago. 4 months would be at that point in time when the price of Bitcoin was much lower than what it is today, close to that drop in early April of about 70 to 74k for BTC. Again, back then we made several videos saying that there is still possibility that Bitcoin reaches that 200k level. Again, not financial advice. Now that the risk levels have amped up from that 8%, which was the lowest risk between 0 and 0.2 risk. Again, this is how the price is compared with the 20-week moving average in a linear and proportional scale to identify when it's a decent time to DCA in Bitcoin, such as in 2021, in the summer lull of 2021, as well as early 2020, March 2020, as well as June 2022, when the price for the first time went below 20k in the bear market of 2022. Again, similarly in August of 2024 and also in April 2025. You can see August 2024 over here when when Bitcoin was forming this flag of lower lows, but again a consistent top over here in that range. So this kind of analysis is available for free on cryptoweeklies.com. You can check out all of the content over here. The 20-week SMA risk chart that we saw is available over here. Then we'll also look at the social media sentiment in the crypto asset class under the crypto TLDR. Right now, the overall sentiment is 86. That is the social media related content related to crypto is having more bullish bias. Also, the narrative word cloud over here, you can see Bitcoin has taken the center stage along with that narrative of the bullish sentiment back in the crypto asset class. Is evidence on the narrative word cloud. This is sourced from YouTube and X. The content related to crypto, if it's having a bullish or words related to bullish seasonality, evidence in the comments as well as in the content related to crypto. Over the last 7 days, it looks for what kind of narratives in terms of term frequency are gaining popularity. Again, Bitcoin has gained a lot of popularity over the last 7 days. Also ETH, again, it's not too surprising. ETH is on this narrative word cloud, and also Cardano over here. From the 19 days performance perspective for this crypto, ETH is still leading with about 69% gain over the last 90 days. ETH has moved to about now at around 2.7k from the lows it set about at around 1300k. So it has almost done a 2x in from the April point of view, April lows point of view. Again, ETH risk is also quite similar to Bitcoin risk over here in terms of in terms of the 20-week moving average. But you can see that when ETH risk outpaces and the Bitcoin risk, then there is a sharper downturn in the market. At least that is how it was in 2021. Bitcoin goes to a point and then ETH on its 20-week simple moving average, tries to emulate that, and when it successfully does that, then there is a wider cool off in the market. This time around, ETH risk has never outpaced Bitcoin risk. At this juncture also, ETH is moving slower than Bitcoin. Again, they are highly correlated, so the risk levels are also highly correlated as well. You can see it from the yearly open. From this is the blue line is what Bitcoin did in 2021, whereas this green line is what it's doing in 2025. Both post-halving years. Again, the year-to-date returns are now matching the 2021. Now that is in 2025. Same time in 2021, the July 9th on July 9th of 2021, the ROI was about, from the yearly open, was 15%. Right now in 2025 it's at around 17%. If 2025 has a late start and towards the end of the year, if the prices from the yearly open are up by about 100%, the yearly open for Bitcoin, again this time around over here, you can see 2025 began somewhere at this point in time when the price was at close to that 95k. So 100% on that would get Bitcoin again theoretically to about 190k. From the Fibonacci level perspective, the next stop is the 2.618 Fib retracement. Again, the last time in 2017, from the 2017 highs to 2019 lows, if you drew a retracement, the 3.618 was at around 64k again, and that was very close to the 2021 peak at around 69k. So 3.618 last time around was a good guidance. This time around, again, as the asset class matures and gets to a higher market cap, getting to that 3.618 every time might not be feasible. Again, a 3.618 BTC is at around 207k. If prices go to that 3.618 from the 2021 highs to 2022 lows, then 3.618 points to a 207k Bitcoin. If we take a midpoint of the 154k, that is a 2.618, and the 207k, the midpoint is somewhere close to between 175k to 180k for Bitcoin this time around. Per the machine learning based price forecast, again this is back on cryptoweeklies.com, one row dedicated to each major crypto, and this is from machine learning price forecast standpoint. From the model, we have trend since price action since about 2014. The weekly price action average is established on this chart, and this data points are used to train the machine learning model using seasonal ARIMA, LSTM, and XGBoost algorithms. The following are the prediction for Bitcoin in the next 6 months. If there is a non-Euphoria bull run, that is a 1 standard deviation or 68th percentile bull case for Bitcoin in the next 6 months, forecasted is range is between 117k. That is the ceiling for this week, and as price action moves to mid-December 2025, 175k is predicted. That is without a euphoria in the market at 175k, which is a midpoint of close to the midpoint of the 2.618 and the 3.618 on this one, is predicted as one theoretical possibility if the price actions were to stay up in the next 6 months. Right now the seasonality is favoring a bullish bias, but again there are no such thing as sure thing in the market. If on the other hand, if there is a euphoria in the market, that is that 2 standard deviation or 95 percentile ceiling gets price action gets close to that ceiling, the theoretical ceiling forecasted by the machine learning model for Bitcoin is between 123k to about 233k for Bitcoin. Again, a 233k Bitcoin on its Fibonacci level, that gets to the close to that 4.23 Fib levels. Again, you could make a case that in the last in the last halving cycle and in the last post halving year, the price action, if you try to add that 4.2 on this chart, you can see that the price action did fell short of that 74k target by about a 5k level. Again, proportionally speaking, it would be close to that midpoint of the 3.618 and the 4.2236. Again, a midpoint over here between 200 and roughly speaking 210k and a 240k would be again close to that 225k. Not too different from the machine learning based price forecast at 233k. Again, a euphoria could stay around for a shorter period of time than what is forecasted. Again, prices do not go in a straight line up, but what these model help identify is that if the prices were to go in that 2 standard deviation bull case scenario, the peak, if it's in late November of 2025, could be at around 225k. Going back to the all things equal base case scenario for Bitcoin between 112k and about 127k, that is if there isn't any bullish catalyst, or if we were to look only at the price in isolation and say that if what is the trend behind the price, that is try to draw a straight line throughout the price action and provide a directionality on what is the likely step that the price action were to take, the trend behind the price action were to take is up and to the right. That means Bitcoin has a favorable seasonality throughout its existence, where if the price were to avoid this boom and bust phases and were to smoothen out into a trend line, the trend line would be pointing to the right, that is price increases with time. And this is driven by the seasonal ARIMA based calculation of the base case directionality between 123k and 113k and 127k is the directionality related trend line. Again, back in, if you were to refit it somewhere in 2021 late 2021, that was at around 13 to 15k, whereas the price did go about a 4x higher than the forecast seasonality based trend line. So it's not too dissimilar to assume that if in 2025 Bitcoin were to do close to 2x from that 120k, price action could see a 240k, at least using this analogical evidence. In terms of the total bull run, the state of the total bull run, again, this is top 100 cryptos by their moves, how they are, how close are they collectively from their peaks. Again, right now the bull market is only 33 or 1/3 complete, 33% complete. That is because most of the altcoins right now are not doing that great. It's you can see, and this is evidenced by the market capitalization as well. Even the difference between the market cap of Bitcoin and ETH, almost $2 trillion difference between Bitcoin's market cap, about $2.2 trillion right now, whereas ETH, the number 2 crypto, is reeling at around 330 billion. So roughly speaking, 1.9 close to 1.9 trillion difference between the market cap of the top two cryptos itself. You can see, if taking a historical snapshot of what it was same time in 2021. Again, if we go over here and do a historical snapshot analysis for Bitcoin and ETH, let's say we are looking at 2021 same time period in 2021 mid July, let's say week of July 11th, and look at the market capitalization. Bitcoin, again, ETH was almost close to where it is right now, again at 250 billion, whereas right now it's at around 330 billion, give or take 70 billion difference. Not that high in terms of price as well. Back in 2021, price of ETH was same time was at around 2100. Now it is at 2700. Bitcoin was priced at around 34k. Now it's at 111k, and the market cap, ETH's market cap was almost 50%, close to 50% of Bitcoin's market cap, only a $300 billion difference. Now the difference between Bitcoin and ETH on their market cap is almost 2 trillion. So you could see that if there is such a large difference between number 1 and number 2, the difference between number 1 and let's say number 10 would be even higher than what it is today. And today, collectively, the altcoin market again has not done that well against Bitcoin, although you can see, and that is evidence between the bull market completion. Although you can see that in December of 2024, when the altcoins started to have a favorable seasonality against Bitcoin, you can see over here how total 3, that is everything apart from Bitcoin and ETH, is performing against Bitcoin. Total 3 divided by Bitcoin. Again, in December 2024, there was a local high that altcoins made over here early December 2024, and that is also you can correlate that with the rise in the total bull market completion. Again, this is not a linear completion. This is using how the volatility alpha and risk adjusted return and percent drawdowns affect the cryptocurrency market asset class as a whole. You can see early December 2024 risks did go to about 0.6, and that bull market completion was at around 60%. But ever since that, although price of Bitcoin has increased from that December 2024 time period, again you can see over here Bitcoin in December 2024 was close to 109k, but again not as high as it is today. Now early December, you can see price peaked at around 108 109k. Bitcoin is higher than that from that point, but again the bull market completion is lower. That is because the total 3 divided by Bitcoin from that point has gone down from almost 59 0.59 to now 0.39. So again, if this is the new base, again this has been in series of downturn again with no support at all on this bleed on that the total 3 or the altcoin market has had against Bitcoin, again without any respite. But if there is a rally back to the 20-week simple moving average on this on this altcoin Bitcoin pair, then there from the 0.39 level, again that logical target is somewhere between 0.3 and 0.43 and 0.44. again in terms of percent, that would be close to 11 to 12% gain if the altcoins were to make 10 to 11% gain on their Bitcoin pair. That could affect the bull market completions slightly. Right now it's only 1/3 complete. That is as of July 9th. That is as of yesterday. In terms of where Bitcoin could go in terms of their regression based heat band, again the fair value comes at around 140k per this model. The 1 standard deviation ceiling, again if the prices were to hit the yellow line one more time, they are at around 227k. So that is one forecast for Bitcoin using regression based model. Again prices have hit or come close to this proximity to this yellow line 1 and 2 times, that is in March and December of 2024. Let's say if they were to are able to do that one more time at around 225k for Bitcoin. In terms of if there is a pullback again in the next 6 months, forgot to mention that there is no such thing that price only goes up with time. There are instances where the price's action does have a unfavorable seasonality and goes down with time. The support level for Bitcoin in that environment is between 91k and around 106k per the 1 standard deviation floor model on the machine learning based analysis. That simple moving average based risk, again this is price color coded with respect to the risk levels. Right now the risk is at around 54% towards the highs, as well as the recent moves that Bitcoin has successfully made. At least in this market cycle, the risk levels were at around 0.7 and 0.8 in March, at around 81%, in December at around 85%. If the risk level, if the price action were to go at 0.8, between 0.8 and 0.9 risk, the price forecasted in that environment is between 123k and around 127k. And there could be some sort of a pullback from the 20-week simple moving average perspective between that 123k and roughly speaking between 125 and 130k is predicted by the simple moving average based model. In terms of the total time weighted average price risk, we are coming close to that higher end of the risk spectrum at around 84%. Again, in the last in 2021 as well as in 2017, we saw a series of red dots on this time weighted average price based deflection. We haven't seen that yet in 2024 and in 2025 so far, so that remains to be seen. Overall, if we were to estimate a bull run peak for Bitcoin using all of this individual risk based models, if they right now the weighted risk is at around 0.4 thanks to the time weighted average price risk contributing a lot right now at 0.84. This is a weighted risk of regression risk, the simple moving average price risk, and time weighted average price risk. Totally, if all of the risk, the weighted risk at the peak were to be at around 0.95, the price at that point in time predicted is at around 264k. If we are being slightly conservative of this target, taking a 0.6 or 8 or 60 or 80% of this 264 target is K target is not the worst idea. The 0.6 of that 264K would point, let's say, close to 159K, close to that 1.618 that we talked about for Bitcoin. If we were to take an 80% of this target, would be close to that 212 or close to that 3.618 for Bitcoin at around 207K. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye-bye.